This is one of the most specific tools in my entire framework. I've used it across over 1,000 documented trades, and most traders either don't know it exists or they use it completely wrong, which means they miss the moment smart money is actually setting up. This is SMT Divergence, and this is how I use it. So let's start with what SMT Divergence actually is, because the name sounds more complicated than the idea really is. SMT stands for Smart Money Technique, and all it means is this. You're watching two instruments that normally move together, and you're waiting for one of them to disagree with the other. So think about NQ and ES. Most of the time, when one pushes up to a new high, the other one follows it there too, because they're driven by a lot of the same money and the same flows. But every now and then, one of them pushes into a new high and the other one just doesn't get there. It stalls, it turns early, and it leaves that high untouched. And that gap between them is the whole signal, because if the move was real, if there was genuine buying behind it, you'd expect both instruments to confirm it together. So when only one of them makes the move, it tells you that the push was more likely built to run stops and fill orders sitting above the high, and not because the market actually wanted to go higher. So that's the logic behind it. It's not a magic pattern. It's just a way of catching the moment where two instruments stop agreeing with each other and using that disagreement to question whether the move you're looking at is really genuine. Now, here's how I actually use it. I'm not using SMT as a signal on its own. I'm using it for my bias, so it helps me understand which way price is more likely to go next. And I'm using it specifically on my middle time frame, paired with the swing formation, because price usually reverses from a swing point, not from the middle of nowhere. So I need to see a swing high or low forming, and SMT becomes my point of interest inside that setup instead of the fair value gap or the liquidity sweep. So the SMT is not the whole setup by itself. So this is an SMT. As you can see, one asset is taking the low and the other one isn't. That's the whole concept right there. Two instruments that normally move together and one of them just doesn't confirm what the other one is doing. That gap between them is your SMT divergence. Now, the first way I use this is for bias, and I'm not using the SMT on its own here. I'm using it as confluence alongside the other tools I already showed you in my bias video. So for example, I can have a fair value gap and an SMT lining up together, or an ERL and the SMT lining up together. It's just another piece of confluence added to what I'm already looking at. If you haven't seen how I build my full bias, go check that video, because this is just one more layer on top of that same process. Now, more specifically, this is where I actually want to find my SMTs, on the middle time frame. And normally on that time frame, I'm using a fair value gap or an external range liquidity as my point of interest. In this case, I'm using the SMT as that point of interest instead. But finding an SMT alone isn't a signal to go long or short. Let's say I find one. Is this enough to take a trade? No. I need to pair this SMT with a swing formation. If you haven't watched my previous videos or you just don't remember, a swing formation is a 3 or 4 candle pattern signaling a potential reversal. So you see here, there's an SMT. Now we have candle 1, candle 2 sweeping, candle 1 slow, and then we have candle 3 expanding away. That's what I need to see, an SMT and the swing formation. And the same here, the SMT and the swing formation. That's how I actually trade this. As for the entry rules, go watch my entries videos, because that's fully explained there. The rules don't change. What's different is only how you get there. On the middle time frame, instead of your point of interest being a fair value gap or an ERL, it's the SMT. Now, here's something that lowers the probability of an SMT, and you need to know this before you start using it. SMT is less reliable when the asset that did not take the low or the high is still sitting very close to it. So if one instrument sweeps the low, but the other one stops just a few ticks away from its own low, that's not a strong divergence. It's too close, it's not spaced out. And that tells you the two instruments were basically in agreement anyway. There was not a real disagreement between them. Let's go over some examples. So here we are on the higher time frame, and we can see that we are bearish and we are very close to this final target down here. We are still respecting the equilibrium, so my idea is now to trade this candle lower to this line down here, which is my final target, my liquidity sitting below. Now, what I'm seeing here is a clear divergence between NQ and YM. Why? Because we have this high on NQ, it hasn't been taken, and the same high on YM, it has been taken. So this is my SMT divergence. What do I also see here? I have a swing formation. So at this point, I can try to find an entry on the third candle and trade the expansion of the third candle. Let's go to the aligned time frame. What I need to find now is just my point of interest. Let's see if this is valid. Okay, this is not valid, but we have another one up here. Now this is valid. We rejected it. We formed this OB, which is my confirmation. So I can now go lower, and as you can see, it trades lower. So this is a good trade using the SMT divergence. So again, this high was not taken by NQ and it was taken by YM. So I have my SMT divergence. And in this case, it was paired with the swing formation, so I can trade it lower. Now let's look at this example. We are still on NQ and YM. What we can notice here is that this low has been taken by NQ, and the same low, which is this one, has not been taken by YM. So what do we have here? We have an SMT. What else do we see? We have the swing formation, candle 1, candle 2, so we can trade the expansion of candle 3. So let's go to the 1 minute, the aligned time frame, and let's look for an entry. Let's see if this gets respected. Not yet. Okay, at this point, I have my confirmation. I can place my entry. Let's target 2R. And as you can see, it takes a while. It gets there. It trades higher. Why? Because again, we had this SMT, we had the swing formation, and we traded the expansion in C3. Now let's look at this example. In this case, we're gonna trade YM. What do we notice? We have a high that has not been taken, and the same high on NQ was swept, manipulated. So in this case, what do we have? An SMT divergence. NQ is going up, YM is going down, and what do we have here? A swing formation, C1, C2, and now we can trade the expansion of C3. So let's go to the aligned time frame and let's look for an entry. So I first need my CIST, which is down here. I am seeing this fair value gap. Let's see if it gets confirmed. Okay, at this point, I have my confirmation here. We can place an entry, 2R, let's see, and it gets there. Again, why did we take this setup? Because YM and NQ were not agreeing. YM was going down, NQ was going up. I saw this swing formation, so I'm pairing my SMT with the swing formation. And what do I want to trade? The expansion in C3 and continuation in C4 potentially. Let's look at this example. So again, we are on NQ and YM. And what do I see? We have a high, which NQ did not reach. And we have the same high on YM, which was taken. So at this point, what do I have? I have my SMT. And what else do I see? I had the swing formation. So now I want to trade the expansion in C3. So let's go to the aligned time frame and let's look for an entry. Here I can see already that we are sweeping this high. So let's see if it gets confirmed or if we have to find another entry. Now it's confirmed. I can place my entry targeting 2R. So as you can see, it trades lower. Why? We had this SMT with YM, NQ did not take the high, and YM did. So when I see this SMT paired with my swing formation, I can trade the expansion in C3 and potentially the expansion in C4. Now let's look at this example. Here we can see that YM took the high and ES did not. It's still trading below. But is this a good SMT? Well, we can see that from this high, there is not much space. It's a really tiny gap. So I am not expecting this SMT to push price down because the correlated asset is very close. So what happened next is that we are gonna break this SMT. As you can see, now ES reached the height and now it's not an SMT anymore. So this is why I was not comfortable shorting this one because it was just too close. Now here's another example. We are on YM and ES on the daily chart, and here we have a low that has not been taken by YM, and we have the same low which already has been taken by ES. So this is my SMT divergence. Now, am I expecting this SMT to push price higher? Well, not really. Why? Because the low of the candle is very close to the daily low. So in this case, what I'm expecting is just that price is gonna most likely break this SMT. And what happens next is that we reach this final target and there is no SMT anymore because now both YM and ES has swept this level. So this was not a high probability SMT. Why? Because it was too close. So let's bring this all together. SMT divergence isn't a signal on its own, and it's not something that replaces the rest of your analysis. It's a tool that fits into two places. You can use it as confluence on your bias alongside a fair value gap or an ERL, the same way I walked through in my bias video. And on the middle time frame, it becomes your point of interest, but only once it's paired with the swing formation. The SMT by itself isn't enough. You need to see that swing actually form around it. And remember, the closer the missed high or low sits to the one that got taken, the weaker that divergence is. So give yourself some space before you trust it. Once you have that SMT and the swing formation lining up, the entry itself doesn't change. So go back to my entries video for the full rules on how I actually trigger into the trade, because none of that changes here. Only how you get to that point of interest is different. This is a tool I use across almost every session, and once you start seeing it, you will notice it everywhere too. If this helped you understand SMT a bit more, hit the subscribe button and turn on notifications because I'm putting out videos like these every week. And drop a comment letting me know what you want to see next, whether that's another concept breakdown like this one or something more on the psychology side. And if you want the day-to-day content, come follow me on Instagram at Sierra Trades. I'll see you in the next video.